Uganda's trade deficit now stands at about $3 billion. Financial experts attribute this shortfall to the negative trade balance, with Uganda importing more than it exports.
But there are a number of other things that influenced the shilling direction. One is we were entering the political cycle, election cycle was just looming. That sends shockwaves, especially the uncertainty that it creates and affects flows. So flows that would be destined here go elsewhere.
The European Union remains the biggest market for Ugandan goods like fish, flowers, and agricultural products. Economic experts say the slowdown in key export markets like the Eurozone has influenced the value of currencies like the Uganda shilling.
We see that, for example, our exports are declining simply because, even when the volumes are increasing, like in terms of coffee, the value is declining because you have a decline in coffee prices. The same story that goes to tea and cotton. So those ones are being affected by the global economic environment.
Since October, the shilling has remained stable, and the Bank of Uganda attributes this to improved inflows resulting from the successful sale of government securities, which attracted international investors. But financial analysts are certain that the shilling could slide back to lower levels in Q1 of 2016. They fear that the US Federal Reserve rate hike is going to trigger a wave of problems across emerging markets, including Uganda.
That in itself leads to capital outflows going back into the US now that the US market is starting to be attractive. We have not seen the end of that yet because reading from what the Fed was talking about yesterday, the expectation is that there will be series of increases going forward. So that is a major risk that we face with respect to the currency.
Security concerns across Uganda's borders also continue to threaten the exchange rate markets, and there is more uncertainty ahead with Uganda's presidential elections taking place in February, and economists are predicting that could cause the shilling to depreciate further. Michael Baleke, CCTV, Kampala.